Мы начинаем, да? Okay. How do we ensure the pledge? And the pledgee has a right to insure the asset. Under the Islamic banking rules, this type of insurance is forbidden, and so it should be insured within the framework of the Islamic law. And this particular aspect, this particular instrument and organization is called takafu. And it's the entire industry having reinsurers, Rita Takafula operators. What is the essence of this particular transaction? The idea behind is that the holders of the insurance policy are the parties to the pool, and this pool generates the cash, and Takaful operator is the manager of this pool. And if traditionally the entire capital tends to be the ownership of the insurance company, the Islamic finance principle presupposes to have a trust in holding the cash, and the Takaful operators place these funds in various investment projects, generate profit and also earn money, and Takaful company gets its commission fee. And there are such models when Takaful is an operator or Islamic insurance company, and they have a right to invest their own funds in this pool, and in this pool the entire cash is being circulated, and all the cash gained become the ownership of this particular fund. It's not the ownership of the holders. They provide their cash on the tabaru principle, and that is the mutual assistance principle, and the principle of black cash desk or pool. Then it will be Rita Takaful. It is a reinsurance company, and thus we derive some funds. Yes, there are such organizations in place, and moreover, Islamic bank has no right to address traditional companies, and from the perspective of the Sharia supervision, they only have a right to address traditional companies as a force majeure circumstances. There are some transactions when you are forced to do it, like we have in Russia CMTPL, and you cannot avoid this particular type of insurance, and thus you are forced to do so, and so this principle of some forced actions are eligible in Sharia. But if there is an alternative, so the specific insurance company of Islamic banking has to be predominating. Yes, we have quite a number of slides here, and we talked for quite a long time about the pledge, and I haven't yet disclosed the instruments of investments, and I have professional expertise 20 years worth, and I also raise funds. And the history of Islamic finance allowed us to raise funds in the microfinancial sectors. And the investments from the Gulf countries are quite substantial, and they are not interested in small-sized projects. Their projects start from the 50 million investments. They have their own criteria. They are guided by if pledger gives a consent, and then this part is insured and substituted if the original pledge was lost. And the reimbursement takes place from the sources of the Islamic insurance company. Zakat of the pledged property is indispensable. And who actually pays zakat? Yes, pledger. It's a mission of a pledger. But if he is not a Muslim, he doesn't have to pay zakat. Zakat is only paid by the representatives of the Muslim faith. And but actually we do not confine ourselves with any race or faith criteria. All standard criteria for having ability, for having employment, for having resources to redeem this particular debt is accepted by the Islamic finance system. And some clients may be atheists or may just profess some exotic religions. But the procedure for issue should comply with the principles of Sharia. And the principle is not to do any harm to the client and to ourselves. Why the bank doesn't write off some funds? If you just pay back your debt, have some kind of an early paid debt, why don't they give you some kind of a discount? Sometimes the management may do it, but the bank is not obliged. Again, it's done with due regard to our laws. If everyone is given such a discount, it will be done with the detriment of the shareholders or depositors. So the bank is eligible to get the entire cost of funding. These are current accounts, these are current deposits, and they may actually become the subject of a pledge. And Islamic insurance deposits or mutual funds or frozen funds, sukuk, securities, advanced payment debts, salam, the contracts for producing some goods, so that it may be used as a foundation for zakat. As a traditional loan, zakat cannot be withheld, and in this case it's all prohibited. So zakat can only be paid from the source of Islamic funds. And the next subject of our discussion is very, very important for Russia. We may look through all these instruments in detail, but for Russia, what is number one? The transformation of the traditional bank into Islamic bank as a part of the experiment or open up the Islamic window. I am the author of the concept at the legislative level, how to open a window for Islamic banking within the traditional space. So we had a precedent on that score. There were some initiatives declared like Akbar's fund or similar ones, but that was just a very mundane method. And legislation has its own constraints, and so I was somehow forced as well to perform quixotry and fight with windmills. I am kind of a person with good weight. I could do that. How to convert the traditional bank into the Islamic bank? What do we have to start from? The management should be replaced by Muslims. It's an obligatory requirement. Maybe some organizational rules are to be employed. So the roadmap has to be set up on the decision of the shareholders, and the statutory documents have to be modified. I have a question about the traditional bank, whether it could be converted into the Islamic bank. And it means that the traditional bank needs to be closed. Everyone who used to work in the traditional bank have to become Muslims or to leave their positions. Any more comments on that score? Okay. I organized one workshop, and we discussed how to transform the traditional bank into the Islamic bank. First and foremost, you have to cut a sheep. A sheep is not to blame. Muslims have a rule that any good deed should be blessed, and so the special sacrifice is to be made for the sake of poor people. And so we cut the sheep and distribute these portions of food. And well, that's a kind of a saying that we have to cut the sheep first and foremost before we start something good. The traditional banks have to exercise their activity within the framework of the Islamic principles. We have to abide by the ruling of a standard. 20 years ago, I was the trainee within this project, and thus we started converting traditional banks into the Islamic bank, and it could be done dually. First of all, the acting owners decided to transform this bank into an Islamic one, or they may acquire the confessional bank by another legal person with the purpose of transformation. So there are two ways. The current shareholders decide upon that, or those who buy this bank. And there's no need to get immediately converted into the Islamic faith and also substitute all the personnel. There's no need. 90% of those working in our bank are not Muslims, and they work very successfully. It means that some specific procedure for conversion is necessitated. The banking license needs to be modified. There are no representatives of the central bank here with us. So the bunch of documents are formalized, and then specific requirements and rules are to be itemized, and a package of documents provided to the pertinent institutions. And normally we have the requirements for the officials, starting from the key accountant up to the Department of Funding. We do not have the word crediting. We call it the Finance Department or the Partnership Finance Department, proceeding from the Russian realia. Also, we reconsider the organizational structure of the bank, the internal legal documents, and who supervises this activity of the Islamic Bank. Actually, that's a special type of the external and internal Shariat supervision. For more than 6 years, I've been heading the structure, the entity involved in the internal Shariat audit. And the functions of this particular department presupposes the daily check and audit of transactions, and that is the internal auditing procedure as well. And the Shariat Internal Committee adopts the auditing plan and checks offices, transactions, clients, calls the clients, and check if there are some infringements registered. And they have a screening methodology. At random, they choose some transactions, and those suspicious ones are a part of this list, and they apply the traditional methodology for auditing, and this is a part of the Shariat audit as well. So traditionally in the audit, in the conventional audit, what is being supervised, so the compliance with the rules, no infringements, but as to Islamic finance, they are keen on the compliance to partnership finance, and whether some violations are registered. And what do? They introduce a body named Shariat Council. They also provide some requirements to them, to the council members. Also, the internal Shariat control and supervision is provided. They open the accounts in the external and foreign banks. Also, they prepare the communication strategy for informing the bank, and that is necessary for the general public. The bank may have the depositors who have been awaiting the profit for their classical deposits, and it would be a bad thing if the bank do not think about their strategy. So they have to transform the bank from the perspective of all the benefits, and the management and the board of the bank develop the special communication strategy to make clients of the banks aware of their procedures.
20 years ago, we invited all depositors of our bank who have deposits with our bank, and we arranged for them a sort of awareness sessions where we explained the benefits of this banking model. Number 7, drafting standard agreements, policies, and procedures in accordance with Sharia norms. All effective agreements should be reviewed. Well, if there some agreements are missing, like pledge, etc., it should be developed and put in place. Surety agreement also, like there is a Rahn agreement, a pledge agreement, and there is a Daman agreement, surety agreement. Everything is allowed with the just subject to some specifics. Planning, switching existing assets and liabilities to fit Islamic principles. Bankers will understand there are two sides of their balance book, assets and liabilities, and the bank should also adopt a certain strategy to service non-allowed liabilities and assets. We'll talk about it later. Relations with conventional banks. The mechanism of relations with the central bank should be changed, whether it's deposition or obtaining liquid assets or other transactions, not to conflict with Sharia norms. Conventional banks interact with the central bank, overnight, etc., swaps, bank notes, credit notes, etc. All these instruments which a priori are not permissible should be totally excluded. Then you should restructure transactions with banks based on refusal to use usury type transactions and using only acceptable instruments for Sharia. The bank should give up, to the extent possible, all its contracts, agreements, loan agreements, and where possible to replace them with Islamic type financing. In Islamic finance, when a client comes to us and says, I want to take a loan, we have an Islamic window. What for doing the loan? I want to buy a cellular phone. Okay, let's do it in Islamic manner. We'll buy it for you, and then we sell it on an installment plan, and you will pay it to us like you do it with the conventional loan. The only thing is that as far as penalties are concerned or prepayment, we do not charge any fees or any penalties. These are the subtleties that should be discussed in advance. And at the end of the day, the bank tries all its current relations with clients fully to put on Islamic track, under Islamic principles, as we have already discussed. All agreements can conditionally be divided into three categories. The first category, debt transactions, murabahat, istisna. Istisna is murabaha. Clearly, who hasn't heard about this? Murabaha is a purchase and sale on installment plan with disclosure of the margin or a markup. For example, an iPhone in a shop has a price tag of 10,000 rubles in a store. The bank adds 2,000, and the bank offers to the client for 2 years, 12,000 for 2 years, with 1,000 rupees each year. The only thing is that the bank should acquire this iPhone and put it on its books. That is, assume the risk. What the professor said earlier the professor said that the bank, if the client refuses to take an installment plan, the client comes home and his wife says that I have sent you to bind clothes for our son and you bought this phone, turn it back. He comes to the Islamic bank again and says, my wife is against this deal. What the bank has to do? I don't know. If the agreement is made, is in place, bank says there are three options. You can divorce or to marry another woman. It's a joke. Naturally, if you stand in risk manager's shoes, if the package has not been opened, the bank takes the phone and carries it back to the original supplier, and the bank doesn't request anything for that. But on the other hand, if my wife is against it, well, better buy me high boots. The bank says, is there anyone with you who can take this phone? Yes, I have a friend who wants to take a phone. Okay, let's drive the phone at cost for your friend, and you will pay us the margin. If in a conventional bank they will say that we don't want to hear about that nonsense, you've signed an agreement, okay. In the Islamic bank, they start to come to an amicable solution, to a win-win solution with no damage done to anyone. This is murabaha. There is another thing, istisna, where the bank says he wants to buy expensive furniture, but there is a familiar professional who can build this furniture at a lower price. Bank says, okay, we'll transfer this money to the furniture producer. Once the furniture is prepared, it is given to the client, and the client repays the cost of furniture. In Islamic finance, there should not be any uncertainty, garar. There are some exceptions, however. Such transactions like istisna, there are salam transactions where there is no items, there is no commodity at the time the transaction is made, or the salam transactions where a purchase and sale agreement with a deferred supply. The client says, I have a client, retail net, they buy my agricultural products, they don't have money now, they refuse to pay, and I need liquidity to bridge the gap. The bank says, we'll give you liquidity, you will deliver the goods at this date to us, and the retail outlet will pay to us on that date. It's a parallel salam. Istisna, when we talked about furniture, it's again it's an agreement, subcontract for production. It may be a construction, or, for example, some entity says, we need bank funds, we have a client base, we want to do it on installment plan. Bank says, okay, we'll give you the money. Oh, the money is given to the building subcontractor, and the repayment of that is done indeed by the customers. There is a wakila agreement. This is an intermediary agreement. Wakil is an intermediary. For example, I must bring some goods which are in China currently. China is now setting new all-time records in terms of sales volumes. Our Central Asian republics are very actively engaged in cooperation with China. Some clients want to order some stuff, some equipment, some property from China. We appoint this person as Vakila. He goes to China, buys the things there, brings the things here. He's an agent where principal, based on an act of transfer and delivery, he gives it to us. And the second step is we make a purchase and sale agreement on an installment plan. These are the tools which are listed in point number 2. The bank makes all effort so that all its conventional transactions are brought in line with Islamic principles. While we're talking about point number 2, and if the loan agreement, if the loan portfolio is huge, how they can restructure this vast amount of loans, how they bring it to higher principles, if the conventional plans and partners and borrowers do not agree to the new principles, what the conventional bank should do it, how a conventional bank transforms, well, its core business. It's pretty difficult. A smart question. There is a principle which we style as a, well, there is fear in our eyes, but our hands are doing. We have plenty of clients of this type. Many of them thought it was some radical or even terrorist thing, or some newfangled fashion. There was misunderstanding at the start. Where possible, the bank looks, well, maybe among such clients there are practicing Muslims. He starts implementation, the bank starts implementation of the strategy starting from them. Well, for example, the bank asks, you have some business in China, you need the working capital, we may buy all these goods and sell them on an installment plan with an acceptable margin. We bring all of it from China, and under a Vakila agreement, the bank is a principal, client as the bank's agent goes to China, makes the procurement deal, and brings it here. The bank, under the second agreement, purchase sale agreement, gives it on an installment plan to the client. Client is the owner. Now if the client wants it, may donate it, destroy it, or sell it. It's client's ownership. In accordance with Murabaha, the ownership rights, the title, is automatically transferred to the client. Normally, the client sets its own margin and resells the goods. Again, well, the margin may be lower, but the bank provides a refinancing facility indeed. The amount of sales increases, and thus maybe with a lower margin the profit is higher. And many clients agree to that. Naturally, the bank still has some clients who have not switched to Islamic principles for whatever reason. Their agreements are in place, they are effective. There are two models. The first model at a full-scale transformation to the Islamic principles, that's a radical change of paradigm for the bank. And the second one is the Islamic window, that is inside of the same bank there are two parallel models. Do I understand it correctly? For the first case there are plenty of questions. What do you do with the bonds can you redeem the bonds immediately? How are your correspondent relations with other banks? I understand issuing loans to legal entities and retail clients. Well, you can turn them to a resale. You can turn loan agreements into resale agreements. No. We're talking about full-fledged transformation. If shareholders, current shareholders decide, they say, all interest excepting the principal of the loan, you do not pay the interest any longer because the bank decided to stick to the Islamic principles. The bank explained it to its depositors. They see that there is some profit, there are some benefits, there is their margin. The first speaker today said that Islamic banks have been demonstrating very good growth rates for the last 30 years. There were no any falls, like for example 2008 or the Russian crisis of 2010. Islamic banking demonstrates steady growth, and the banks giving proof to its calculations said that before that you received your profit in such form, but now we can share our profits. Well, in simple terms, you become co-shareholders of the bank. Well, in practice, many people agree to that, and for now they are happy. With clients who had loan agreements, the bank has relieved them of their liabilities that stop to charge interest, but the principal of the loan, the principal should be repaid. Well, the principal should be repaid to the bank. Bank cannot write it off, otherwise it will go bankrupt. If the bank decided to make a full-fledged transformation and there is a threat of bankruptcy, to sustain its operations, the bank should proceed with some loan activities, but under the supervision of the Sharia panels. If the bank intends to transform, they have the right still for some time continue with some transactions as a conventional bank. It is necessary. The bank can well, relieve the client of the duty to pay interest. Unfortunately, I cannot hear the question. The lady is not using the microphone. This is for the financing department. They may relieve the client, or some clients, of their obligations. Some clients, if you need some working capital, we can use the Mudara principle to give you that trust management. The bank is a supplier of capital, Rabul Mal, and the client is Mudari, a receiving side, receiving proceeds from the project, depending on its success or failure, and the client shares its profits with the bank. If the client suffers a loss, then the bank co-shares in this loss. That is the matter of justice, fairness. And well, if you refuse if I offer to you not to pay a fixed interest, but rather to share your profits with me. It is much better for a client than a situation where the bank just flatly says, I don't care about that, just repay your debt. In this case, the bank makes an excellent offer to the client. Well, if you want to build a house, we'll pay to your subcontractor or to pay construction materials. We'll audit the subcontractor, and instead of the loan, we'll buy all of it for you and give it to you, but you will be repaying the total debt on an installment plan each month. For clients, there is a whole universe of opportunities. The situation is much more flexible. Two cases when this is clear. Either you understand everything or you don't understand anything. I hope you understood everything, or maybe in the middle. What are the terms and conditions of repayment of the principal, starting from what months? For repayment of the principal. It depends. That's white collars who work in the bank. The executive management orders them to talk to all of the clients and the conditions on which a client is prepared to work. Examine the financial situation of each client. And this white collars, that is loan specialists, well, they have their own loan portfolios. They call each of the clients and say, we're prepared to restructure your contract. We switch to Islamic principles. If you agree, come to us, we'll review your repayment schedule. It's all on a case-by-case basis. Someone says, I don't want to participate in an experiment. Just give me 3 months and I will fully repay the loan. Someone says that, I have different beliefs. Give me 6 months, I will settle the debt. The bank talks to each of its clients. And as the professor of economy said, each employee looks after a certain loan portfolio. It requires some efforts on the part of its employees. Why Islam Bank is a just thing, is a fair thing? Because there are no idle employees. They are waiting for the time where the client settles their. It's a sort of upgrade for all clients, and the clients become more client-centric, client-oriented. Now the entire road is more client-centric. If you look at hotels, all spheres become client-centric. Client centricity is in the heart of Islamic finance. Now let's forget about these declarations and let's move faster. Consequences as far as debtors are concerned and interest accruing on them. In simple terms, what are our debtors? Where are our bankers? Where are the bankers? What are your debtors? Debtors, that is what people owe to the bank. Loans, in simple terms, some obligations to the bank. All consequences of early made transactions should be liquidated, where the bank issued cash and took cash and is obliged to pay interest. The bank takes stock of all credits and looks how it can be classified, mujara, etc. The categories are determined and proposed to the clients. This rule applies no matter whether the transactions were made with retail clients, banks, or the central bank. It doesn't matter whether the bank works with retail clients, legal entities, or central bank. The bank should fully take stock of its loan agreements and switch them to the extent possible to their Islamic principles. If people say that we want to retain this agreement, in respect of such clients, the agreement will stay in force. But this do not pay the interest. The client may say, I want to pay interest to you. I don't want any judicial problems later. The bank receives the interest payment and channels it to charity. Once the bank starts to cleanse itself of usury transactions that starting from the financial year, fiscal year where the bank decided to transform. It also relates to deposits, investment certificates, preferred stock, interest-bearing bonds which were issued by the bank before the decision on transformation. Where possible, the bank tries to transfer all these transactions to Islamic principles. If it is not possible with some clients, then the bank maintains such instruments till the term of the contract expires. The bank should restrict itself to the allowed ways of funding which is necessary to finance current operations. If the bank has some assets like buildings or real property, movable property, the bank starts to lease it out, ijara. If the bank can issue securities, the bank can issue sukuk, bonds to raise funds. The bank fully switches in the process. As an example, you may say, the number of shares by increasing the charter capital, or starting term accounts or on-demand accounts. Such on-demand accounts are allowed. Pensioners' funds are permissible for the bank, provided these funds are on-demand accounts. And such proceeds can be used for the Islamic principles. Consequence of transformation in respect of the outstanding instruments. If the bank has some outstanding loan agreements, the bank should review such loan agreements. Where necessary, the bank must suspend them, and all relations under such agreements should be replaced with the allowed principles, allowed under Shariat principles, where the bank may be supplier of capital and there is a manager. In such situation, in rough terms, the bank provides working capital, or sharaker, where client says, I have some funds, but I need more. The bank enters into a partnership agreement in respect of a project and finances this transaction. Ijara, reverse situation, the bank says, I want to buy some agricultural machinery. I want a lease agreement. And from the Sharia perspective, leasing is not permissible here. And Ijara Mutahibi Hizlik, that is the proposal of the bank, that is a transaction with the lease with later buyout. The client leases equipment and then can buy it out. Then all of the efforts should be made to terminate all the issued loans, all the loans that were issued. The bank makes a complete stock taking of the loan portfolio, looks at the maturity dates, and tries to transform them into funding in accordance with their Islamic principles. If it is not, the bank doesn't succeed, then the received interest should be disposed of in accordance with Islamic principles. For example, the bank cannot restructure a portion of its portfolio, but all interest received under these agreements, the bank applies towards charity. The bank doesn't have the right to make any statements in respect to that, so to obtain some indirect benefits like advertising or public relations, etc., without public knowledge. Transformation of a traditional, of a conventional bank into Islamic bank, management of unallowed liabilities which existed before the decision to transform was changed. The bank purges itself of non-permissible interest. If the bank undergoes the procedure of transformation, then the starting point for the purging from interest on loans should be considered the start of a fiscal year. The fiscal year starts from the 1st of January and ends on the 31st of December. If, for example, the bank make a decision in April that all transactions which were started from January 1 should be cleansed, there is no need to write off doubtful income. There are some transactions where you do not know whether it was Islamic, and in respect of that, the Sharia Council takes decision.
If a bank has a right to exercise and dispose of illiquid assets, they may take these assets with an intention to get rid of them. For example, the bank could have bought some pork as a pledge, and the pork is to be liquidated,
Slaughtered,
with the purpose of the public good. For example, to get rid of some tons of alcohol. Such radical changes somehow scare bankers in certain instances. And it's interesting for us to know, what do you mean by Islamic windows? I may talk about them in more detail. And I have another question. Microphone, please. So, traditional bank converts into the Islamic one. Do you have it in your practice? Yes, in Russia, in August last year, we only announced the experiment. There were no legal basis for that, no legislation. Adalit Jabiev is a pioneer of this particular venture. He comes from Azerbaijan, and that was something not very professional. And as of August last year, we started this experiment, and 7-8 months are left out of this 18 months. And by banking standards, it's okay. And I started from that. I started my career more than 20 years ago from the transformation of the traditional bank. And this bank has a pilot mode, and we also have some kind of a sandbox. And this is a pilot project still. But the bank has been converted through some traditional transactions. We were forced to do so. And we had some specific problems with the instruments for liquidity, some swap operations, and the central bank doesn't have a chance to work out these instruments pretty fast. And the bank is forced to resort to traditional banking operations like depositing and liquidity management. And this is a standard. And today, many banks abide by this standard, and they are transforming the banking system this way very actively. Sorry, the question cannot be heard. And the bank writes off all these procedures. And we have ladies of a pension age interested in that. And if they are buyers and not the shareholders, and well, they have to forward this interest for the sake of a charity. But if the bank has this usual operations, they have to get rid of them. And if your obligations presuppose providing of some prohibited services, so the bank should also exclude them from their list. And the bank has to terminate all these transactions. Some banks exercise the insurance services. And of course, the bank is not involved in some alcohol services and transactions, and I haven't met anything of that sort. When the bank is involved in the production of alcohol. And we are talking about banking services per se. It's a letter of credit. And this is another service. And the bank gets a commission. And in Islamic banking, you are not supposed to get this commission. And this is an act or a gesture of goodwill for Islamic principle of funding, with some certain exceptions. And so in practical terms, we have like 1% of a transaction, and it covers the traditional expenditures. This is the first alternative. They tend to say you'd rather not go to the traditional bank. You'd rather use another service, or also you may be interested in retaining a client. And probably we have to exclude the assets which are prohibited and some other obligations, and the payables should be put on the shoulders of a seller. So Sharia banks are supposed to do it this way. And I mean the buyers of the bank or acquirers. And you are supposed to do it yourself, but you have to just purify your list. And if these are usury, so they have to be also forwarded for the charitable purposes. What can you say about it? This is the interest for bonds. Also the dividends. Loan transactions. With the exception of the interest rate. Commissions, fines, interest, do you have the commission for the early payment? Early payment. You bring it to the bank. You bring the money to the bank, and you have the early payment, but in other banks you are penalized for that. And the bank has no right to use those transactions for their own purposes. So marketologists may have a PR campaigns for transactions, for various promo campaigns, or for people with disability. If the transformation is provided by some external parties, these people are not liable to pay money for the past financial periods. If the owner of the bank is Muslim, they are supposed to pay zakat. But if the people who buy this bank with the purpose of transformation are not liable to pay for the revenues of the bank, as these are the liabilities of other people who were the owners of the bank. And so the new owners have to provide the information on their extra revenues. So the shareholders are supposed to pay zakat over the past period, and the calculation of the profit in transactions. I have to end my session here. I'm joking. So we are coming to the core of our session. How the bank makes money. Sharia standards also regulate the rules of deriving cash. The question cannot be heard. These are the principles not vis-à-vis the priority. No one will give you a license if you have no Sharia counsel, if the typical agreements are not of a Sharia nature, and whether you have a special chart of the company, if you have some jobs and responsibilities. Also, we have a code of ethics for accountants, and they additionally have to follow the code of ethics of the Islamic institutions. Do we have accountants here? It means that the central bank has to supervise the Islamic finance registration and the license issue for Islamic banks, and so they write down all the requirements, the capital adequacy, the requirements for reserves, the requirements for funding, for accounting for risks, availability of some specific services in the bank. So central bank takes care of it, and thus they may start auditing the bank. We are risk oriented in our supervision, and now if we have some kind of an alarm or signal, the bank may initiate a planned or urgent audit. That's what I have. Nobody will give you the license. You first and foremost have to abide by the ruling of these banks. Partial provisioning, what do you mean by that? Yes, all the prudential requirements are in place vis-à-vis different rates, nominal rates, efficiency. We have it everywhere, not necessarily here. And in some central banks, people have a better understanding as how it should work, but some are somewhat lazy. They do not know how to deal with that. And there are quite a number of movements to be done, and so all these transformations, all these movements incur additional costs, and Islamic banks have a higher margin. But as we are incorporate it in the market economy. We have to take care of the demand and supply. And Islamic banks have to minimize their margin exactly the way the traditional banks do. They do not want to lose their clientele. And yes, in order to support the community, we may somehow give up, but the Islamic banking has quite a number of depositors. They also compare what is better. They do consult what is available. They just supervise the traditional products, the Islamic banks products, and if a person doesn't want to be doesn't want to be competitive, that's one thing, but really they have to think about it, about their role, about their prestige. They also have provisions, traditional costs, the content of the Sharia supervision, the training costs, etc. About 6 or 7.
Starting from scratch, no one is doing it now because from scratch you need personnel, etc. One, the project was transformed. The other followed the concept which I implemented, that is Islamic window. I implemented the concept of Islamic window. There were some questions to this extent today. The Islamic window assumes coexistence of two types of activities, but in terms of their books, balance sheet, they're the same entity. Islamic windows face their own challenges. Islamic population believes that the bank sits on two chairs, wolves of the traditional banking and the Islamic banking. They are more mature, and they also demonstrate very good financial performance. Those employees who are engaged in Islamic finance, it's the starting period. They are not up to that level in terms of their skills or advice, etc. But it's just temporary because the entire banking is becoming more client-oriented. Islamic banking, that means green economy, the principles of sustainable development, etc. A more flexible system of funding, huge opportunities for unlocking its potential. If they have only one tool in the conventional bank, that is instrument lending, while in Islamic bank you have a plentitude of opportunities. My final question on the previous subject, refinancing, clearly that liquidity for Islamic banks is a major issue. The Central Bank of the Kyrgyz Republic has prepared some refinancing instruments without the refinancing rate. As of today, the Central Bank has an intention to develop instruments for operating for existing Islamic windows for the pilot project, but since there is no critical need for that, because the Islamic windows have sufficient liquidity. Why so? Most likely thanks to their former assets and liabilities. thanks to conventional activities. In the Islamic window, those funds that were transferred to the books of the Islamic window cannot be returned back. Otherwise, there is no point in starting an Islamic window, since we issued a certain card of the conventional bank and say, okay, conventional bank issued a card, but where do you take your funding from? The haram activities, and where all the profits will be channeled to the conventional banking, or where? Then I have a question. Without the concept of the Islamic window, without a clear separation between separation of accounting and activities, the issue of a product will be useful. It's just walking on a minefield, stepping on a minefield. You may face grave image problems. No matter what sort of Shariat panel you have, your clients will see that. If you look at the clients of the bank with the people who came to bank 20 years ago, the clients are much more proficient. They say, I'm a Muslim, I took your card, but well, all the income you derive from that you put to your conventional banking operations. Who taught you that? This concept, this conceptual approach took me about a year to hammer out. I was ahead of the working team, which included lawyers, accountants, compliance specialists, auditors, etc. It took me a year to put it on track. And there is another thing here. For example, conventional banks with Islamic windows are either interested in extending their customer base by inviting Muslim clients, or for raising investment. And the issue of image is critical in both cases. If you are not able to make such a structure which does not stir any questions either at the international level or at the domestic level, it means that you really implemented your plan, either full-scale transformation or a window. Indeed, I believe it's a somewhat a radical approach. In this way, you scare away people who work in classical banks and make small steps on this road. Well, gradually the quantity will translate into quality. No, probably already issued that. Probably I cut you to the quick maybe. I just want to say that it's not my internal conviction. No, it's just a research. My research look at the banks where there is a clear-cut division. Even if the bank makes its first steps, such steps should be made with confidence. It depends on Amara Binya. All affairs are assessed at the intention. If you declare to your clients, as and when possible, we started to do that, otherwise you won't have this opportunity at all, notwithstanding the fact that we spend some time with our consultants, etc. We spent very many work hours on that, And we managed to implement this small thing. It is proof of your intention, and the attitude towards that will be according. But there are banks, there is global practice where people just say that we stick to these principles, and the funds from permissed transactions outflow to usury transactions. That's what I mentioned. We touched upon extension of the customer base for Islamic banks. But while in Russian banks there are such things as mother capital, subsidizing young families, etc. Are there anything well like that in your republic or in your Islamic banks? I would like to step aside from my country. Why? Because I'm here not to promote the banking practices of the Kyrgyz Republic. I'm looking after the global practices and the requirements that I've discussed with you are standards. For example, the Persian Gulf countries follow and abide by these countries. Their employees were trained in accordance with the standards, and they will assess compliance of your activities based on such standards. It's not that I drafted it well just on a page of paper. No, these are international standards that are complied with across the world. And these standards are categoric as far as usury transactions are concerned. But they say as and where possible. There may be cases where it is impossible. For example, you may need to train plenty of employees. It involves a lot of spending. You need to upgrade your accounting, your legal service, your marketing service, your sales force, etc. You have to review your base of vendors and suppliers. It requires a lot of efforts, and you cannot do it overnight. You make a small step forward, and each step can be viewed as a huge achievement in Russian realities. In the Arabic world, you can do it with a snap of your fingers, because the Shariat principles underpin the local laws. In Russia, the situation is totally different, and any attempts to launch an experiment, well, I fully support. As an expert, many years ago, I gave training sessions to employees of the central banks of the Eurasian Council countries. I told them that look at international standards and comply with them. Do not look for the opinions of some scholars and professors. There are internationally accepted standards which are recognized by KPMG and other big names in Europe and elsewhere. Well, and yes, in some cases it's better, in some cases it's worse. It's clear. By your leave, about the parent capital. Well, in 4 regions, parent capital is allowed to be used for Islamic finance mortgage loans. The state mortgage company, which provides housing at soft terms to employees of the public sphere, the teachers, doctors, etc. Those people who cannot who do not have high incomes. The state mortgage company proposes them such facilities. Recently, that state-owned company raised $75 million to be used to issue mortgage loans to doctors, teachers, etc. Well, are we on time? The rules for calculation in transactions. You ask me, where is your math? My math sticks to Sharia principles. It is not related to calculation or to calculation of profits of transactions. Sharia advisor doesn't have the right to interfere with determination of margins and markups. That's where the managers of the bank have, let's say, full freedom. The full discretion. The Sharia advisor can look at some unusual things. For example, the agreement contains some provisions which cannot be used for calculation of margin, but the size of the margin anyway is done by the management of the financial institution, depending on the market environment. Naturally, there is an opinion of some scientists, once again I qualify, about the margin for foodstuffs, agricultural products, commerce, etc. This is what some of the scholars think. There is a hadith where people came to the Prophet, establish market prices. The Prophet said, if this duty is not imposed on me by God Almighty, if the God has not told me to establish these prices, how can I assume this responsibility? Therefore, in Islamic finance, the issue of margins is resolved by supply and demand. There is no any ceiling. There are the rules to measure your appetites. There is in Islamic. For example, a restaurant is started and they prepare halal dishes and conventional dishes. You will not say it costs at a conventional restaurant the dish has one price. In your halal restaurant the price is different. Maybe the products are different, maybe some other principles underpin this price. We cannot blame Islamic finance for high prices, but the philosophy of Islamic finance points to the fact that there is an opinion, Mahasid. The purpose of Sharia in economy is that money should be distributed in the fairest possible way and the funding should embrace as many as people as possible. All greed, all pursuit of profit should not be encouraged. Under the general rules, the relevant authorities should not restrict the size of profit, excepting the cases of clear-cut speculation. Ihtiyar, that's monopoly, oligopoly in the banking market. Oligopoly in the market is quite popular. Or emergency situation. If the benefit for the public is obvious, then price regulation is allowed. The central bank sets the rate. Normally, the rate all standards for the refinancing rates apply to Islamic finance. Globally, scientists, including the Accounting and Audit Organization for Islamic Financial Institution, work on setting some target or some benchmark for rates, but it depends on a lot of national factors in each country. An entity should clearly explain to its client the principles used to determine and calculate profit. The annuity method, standards say there are no problems. The agreement should mention the total price or the cost, or as a share, percentage share of it.
I mean the margin, which is identified and measured as a percentage. You take some kind of an amount, $100 million, 10%, and this is a margin. This is considered to be a margin, and thus margin is instituted. And if the amount of profit is identified, they have to explain why they do it in order not to mislead people. And I do remember this small font in the contract, some additional conditions, some methods, some percentage, and all the banking community obliged to use font 12 times New Roman, and it was not an obligation in the past. They do it in the past at their own discretion, but no longer. And how the profit in a transaction is being calculated. So we already discussed it at the first session, and how profit is identified as a fixed amount or as a part of a share or interest in the capital of a client. Also some average indicators in accordance of Mudaraba are being instituted depending on the term. For example, we're talking about the deposit. We talked about Murabaha, dealing with the client, and also we have passive transactions, Mudaraba, which is being limited when the bank just opens an account on demand for a specific period, exactly as they do in traditional banks. And they leave their deposits, but the bank doesn't promise any interest, but the share of profit within these projects. This is all standard, and these contracts are public. They are all standard and individual. Okay, it's not prohibited. Yes, we have the limited amount of the investment and the uh, rate of return, which is lower than the identified percentage. And we may tie it to the active transactions and to passive transactions. They are also interrelated. And I'm also a developer of the product as to fundraising, and discussed it with you at the very start. And this product was not existing in the past. So it was Morabaha, but as to passive, it was Hassan and instrument, and it is used for pension funds, for pension accumulations upon demand. Upon demand. And so if you have a specific number of clients, so you may actually do it this way. It's a carte Hassan, that's a good-looking debt, if translated word for word from Arabic. It means the loan-free, interest-free loan, or soft loan. And in Russia, they are experimenting now. You may say 1%, 2%, 3%. You are talking about other experiments. It's done beyond the boundaries of this experiment. It doesn't have to be 1%, 2%. We are abiding by the international norms of the Sharia, and there are no problem with that. And it is signed on the basis of the decree of the president, number 417. That is the civil code. So this is 1%. Now you have a good opportunity to spell it out to the central bank, just to cover this road, to cover this way. But if you act passively, the central bank do everything on their own discretion, and we won't be able to modify anything. I would like to put a question. It's from the Russian Realia. And Sberbank, Tinkoff, Akbars, they declared that they have the product Islamic card. We do not give you any interest rate. But the problem is that we are holding money as any bank. But by 90% they may use these funds for issuing a credit. How to resolve this particular problem? Why do you not discuss it? It's a real big issue, I should say. Dear colleagues, I am wrapping up. That's a wonderful question. You put another question. Yes, you are. You have a card. You get the money, but the bank doesn't have transactions in accordance with the Islamic principles. And they may do it via their FX operations, and in practical terms, FX transactions are allowed in accordance with the Sharia rules, and also there are transactions for money transfer and other transactions which do not need any Sharia products. One traditional bank for quite a long time accepted investments from Islamic Bank for Development, but they didn't have a single product arranged in accordance with the Islamic ruling. And life is very easy. They use their non-credit operations, transfers, FX transactions, treasury transactions. They got their commission for granting certain services, and this way they raised funds without any partnership Islamic products. And that might be done. And Sberbank does the same thing. And the Sharia Council should somehow respond. So you issue the card, but you really derive a profit. And these funds go back for the conventional activities. But how do you act? Via treasury transactions, via FX transactions? If they say, yes, we do it there is no question to that. And it is perceived to be a right thing to do. But they are trying to do something. They are taking steps, and they invite experts. And I don't know. We really have to act. We have to welcome these particular steps. Otherwise, we won't be able to achieve anything. We talked about the different types of activities. And I put this question to Sberbank as to the halal cards. For example, I do not want to fund tobacco and alcohol products. They say that they open their cards in the offices having halal activities in Chechnya, Bashkortostan, and these cards will be opened in 4 regions. And the money, the cash will be forwarded to the halal instrument, to Murabaha operations. Your name is Mohammed, yes. I'm so sorry, we're pressed for time. Maybe we may sit together and discuss it with you. And you will be given a certificate as the attendee to that course. And let's answer these questions, and thus you will strengthen your knowledge. And I've been working as a teacher in the higher educational establishment for the Islamic finance. So the question is, what about the indicated transactions for the pledge? Musharaka, Mudaraba, Wakala, not a single one. Mudaraba. Mudaraba. And these Bal Amana transactions on the basis of trust, and the pledge means that you do not trust a person, and the pledge is a guarantee for profit. How can you take a guarantee for profit in these particular agreements? You really have to trust one another. But there are cases like Ijara, It is also an Anana contract, but the Sharia standards make some kind of a clause. If some negligence occurs, the bank has a right or eligible to urge upon the pledge. But in case of abuse and negligence, in this case it may be a jara, the lease. When you come to the hotel, normally your hotels take a deposit from you, and this is in practical terms a contract for pledge. Why do they take a deposit? Why do they do that? That's a mistrust to the client. That's absolutely true. And this deposit may be a guarantee for exercising an agreement. If, for example, you push a refrigerator or break something, in this case, the hotel has to assess this loss and just take money from you. No, you didn't manage to go through the first stage. If the pledged property is in the ownership of the third party without any negligence, who is in charge of the loss of the asset? Rahana. So pledger, third party, not a single one.
Not a single.
In this case, it's a pledger. In this case, they have a loss. What might not be used as a pledge? Sukuk, perishable goods, stocks of the insurance company, use the fruit of property. What should be undertaken by the conventional banker converted into Islamic bank? The reconsideration of the organizational chart, internal and external Sharia control and supervision, preparation of the program and training of the personnel and IT changes, and also the preparation, drafting of the typical contracts with regard to the Sharia principles. 3A. B. IT. If the bank is in the midst of conversion, has a right to any prohibited non-monetary assets, they may get it with the aim of liquidating them, transferring for the charity purposes, leasing, and selling. B. Charitable actions. You have the same opinion. Have you got a certificate? So you do it at random. A and B. Ты не угадал ни одного вопроса. We have to give a golden certificate to any group, to this group. That's the liquidation. But Sharia Council may take another decision if they deem it necessary. They may take it as a charitable action. But this is not a principle of Sharia. If something is forbidden, it is forbidden and needs to be liquidated. So Sharia Council says, okay, this amount may be forwarded for charitable activities. Thank you so much. These are our contacts. I would like to give you the round of applause and thank you once again. And I think you will be successful in the field of the Islamic finance. I would like to give the floor to our colleague.
Dr. Ustaz Abdul Rashid Zohrev, I'm really grateful to you for having such an interactive session, and I'm thankful to all of you delegates for attending and patiently listening to the course. And I welcome again next year and maybe year after year for undergoing this course. A little bit more advanced, get day by day, year by year, will get more advanced. And I also let me take this opportunity to invite you to IOFI in Bahrain. We have two conferences every year. One is Sharia conference, which just happened 2 weeks back. And also in November, we will have IOFI Islamic Development Bank conference in Bahrain. So all of you are invited there, and we look forward to having you again and again. And thank you so much for your participation. Thank you very much.
Уважаемые коллеги, так как вы без 5 минут.
Dear colleagues, you are practically certified specialists. Let's take a joint photo. It will be a historical one, as the Islamic banking is originating in Russia, and this is the first visit of such a reputable organization.
Can come on stage, please. We'll take a group photo.